Cloudy valuations provide investors pause in buying beaten-up U.S. shares. New York whipsawing bond yields, surging oil fees and a Federal Reserve bent on squashing the worst inflation in 4 decades are hampering buyers' capacity to assess U.S. inventory valuations, even as the marketplace's tumble creates ability deals. Without a doubt, stocks are far inexpensive than on the start of the year, following a 23% year-to-date decline in the S&P 500 that confirmed a undergo market for the index in advance this week. Whether they're cheap enough, however, is much less certain. Market volatility and a swiftly changing macroeconomic landscape have clouded metrics that investors normally use to price stocks, inclusive of company earnings and treasury yields, keeping some ability customers at the sideline. Until we see some better visibility at the costs outlook and a few higher visibility on the earnings outlook, the truthful price for equities is a bit elusive, stated Samir Samana, senior worldwide marketplace strategist at Wells Fargo, NYSE, WFC Investment Institute. The institute these days started recommending customers lessen fairness risk and flow funds into fixed earnings. Stocks got here underneath greater stress this week, with the S&P 500 falling to its lowest due to the fact that overdue 2020, inside the wake of the Fed enacting its largest rate hike in almost a long time. This 12 months' decline lowered the index's forward price-to-earnings ratio, which compares its rate with its predicted earnings, to 17.3, from 21.7 at the start of 2022 towards the market's historical average of 15.5, in line with Refinitiv datastream. But even as S&P 500 profits are predicted to upward thrust nearly 10% in 2022, consistent with Refinitiv IBES, some market participants doubt those estimates will keep up in the face of surging inflation and tightening economic situations. Wells Fargo Institute strategists forecast fantastic however slowing income growth this 12 months and a contraction in 2023, as they assume a recession in overdue 2022 and early 2023. We are advocating to traders to do not forget an economic system and an profits backdrop that can be greater tough, so just do not be fooled with the aid of wherein valuations are based off of brand new expectancies, stated Chad Morganlander, portfolio supervisor at Washington Crossing Advisors, who's recommending clients hold to underweight equities. Graphic, S&P 500 timeline 20 image percent 201,655,478,585,336. Morgan Stanley, NYSE, MS analysts count on income to are available between 35% under consensus views, main them to forecast that the S&P 500 is possibly to look at extra dependable level of guide at 3,400, some 8% below Friday's degree, they wrote earlier this week. U.S. Treasury yields also play an critical function in well-known valuation fashions. Since U.S. debt is seen as a highly risk-free investment, rising yields tend to stupid the allure of stocks, as they weaken the price of Destiny Coin's flows in preferred models. Yet moving expectancies for how hawkish the Fed will want to be to fight inflation have made yields exceedingly unstable in recent weeks, making that calculus more difficult for buyers. The benchmark 10-year Treasury yield has traded in almost 35 foundation factor range simply this week, while the ICE NYSE ICE BO FAML Move Index, which measures Treasury marketplace volatility, stands at its highest stage for the reason that March 2020. Broadly speaking, the risk-free price rising adore it has as a headwind for equity indexes in addition to person equities, Morganlander stated. Some traders believe stocks have fallen low enough to start dipping in. Peter Assel, head of portfolio control for Commonwealth Financial Network, is advising clients to gradually begin buying stocks, projecting that an oversupply of home furnishing and other client goods in conjunction with changing demand choices will emerge as moderating prices. I simply think that equities have inflation incorrect, Assel said. Fed Chair Jerome Powell, who this week referred to as inflation, much too excessive, will deliver an updated view at the environment whilst he testifies subsequent week earlier than a U.S. Senate committee. Others remain hesitant. Robert Pavlik, senior portfolio manager at Dakota Wealth, believes an inflation fix might not be forthcoming. He has lower than typical equity exposure in portfolios he manages and is greater heavily weighted to defensive shares and those linked to inflation, which includes electricity. I want to be satisfied that inflation is displaying symptoms of slowing down, Pavlik stated. Until then, I am ready on the sidelines with extra money.